So to start off this tax resolution interest meeting, I'd like to show you a video to showcase what we talk about is not just some abstract notion, but we talk about real lives and real stories. And so let me show you this video to set the context for our discussion here. So check out this video.
Based on real events. Sarah, a dedicated single mother, was determined to provide a stable and comfortable life for her 2 children. She worked multiple jobs and started a small business on the side, all while managing household responsibilities. Sarah's plate was full, balancing work, family, and her entrepreneurial dreams. Amidst her busy life, she overlooked the complexities of tax obligations for her growing business. Due to COVID implications, her business began suffering. Unbeknownst to her, her business was slowly accumulating tax debt, and she was missing crucial deadlines. As the debt silently mounted, Sarah's financial situation deteriorated. She began borrowing money to keep her business afloat and to support her family. The stress and sleepless nights took a toll on her well-being, but she was determined to make ends meet. One fateful day, Sarah received a notice from the tax authorities. The reality of her situation hit her like a ton of bricks. Her business was facing a substantial tax liability, penalties, and interest. She had unknowingly dug herself into a deep financial hole. Despite her best efforts, Sarah found herself trapped in a cycle of debt and desperation. Her business began to decline, customers were lost, and creditors closed in. The weight of her financial burden became unbearable, and she had no choice but to declare bankruptcy. She lost not only her business but also her home and the sense of security she had fought so hard to create for her children. Sarah's story serves as a somber reminder of how the lack of awareness and guidance can lead to devastating consequences. In her struggle to juggle responsibilities and chase her dreams, she neglected a crucial aspect of her financial life. A simple investment in seeking tax relief assistance could have provided Sarah with the knowledge and support to navigate the complex tax landscape, potentially saving her business, her home, and her family's future. It's a poignant reminder that sometimes, in the midst of life's challenges, seeking help and knowledge can be the lifeline that prevents a tragic downfall. Sarah's story underscores the importance of recognizing the signs of financial distress and taking proactive steps to secure a stable future before it's too late. With the knowledge and support to navigate.
Yeah, so we see that these stories happen to business owners, especially if business owners get really busy with the operations, and those tax requirements can easily slip through the cracks, and it's not uncommon situation to find yourself in Sarah's shoes. So it shows us that anybody of us could be in that situation, because the tax requirements and are complex, especially if you get into business, and then it's easy to miss one or a couple filing deadlines, and lo and behold, you're dealing with the penalties and interest, and then the IRS can assess interest on the existing penalties. So we talk about the time value of money, and rather than this individual makes money and maximizes the profit for his business, this business owner is dealing with the drain on assets and profit. So when we talk about my company's concept, the readiness, I want to show you the entire concept of it, so that you understand our approach. So this stage here, see, if you look at the hexagon, because of 6 service lines here, we talk about tax resolution. So we hardly build business value here. Our value is in helping stop the bleed, so to speak, and put the put the bandage on the to stop the bleeding, because if the paychecks are garnished and up to 90% of paychecks can be garnished by the IRS, I don't know how they think people can live on 10% of their paycheck or their earnings. But our goal is to stop bleeding here, and all the dent to defend and protect against the like to stop the bleeding, so to speak. Then, if these people risk not risk getting themselves in this situation, they may be. I mean, it's indicative that they are risk takers. Perhaps they were not either aware or either took too much risk in this situation. But if we harness it right, we can help them with color accounting in this stage, with financial literacy, to give them the value building framework to be successful in their business. And then as they are running their business, well, they usually need cash to finance their business's growth. So we can help through tax credits and through access to capital to get them finances for growing their business. And then as they go through their business, we help them with financial planning and analysis and outsource CFO with the key performance indicators, with ratios, with the ways to inform their strategy for the future, to forecast for the next month, for the next quarter, to do cash flow management, and so on. And finally, when they get to selling the company or franchising it, we can help with financial and tax due diligence. So the idea is to help with the entire value cycle, from stopping the bleed all the way through opening the business and then making the business successful, starting with the end in mind here with the due diligence concept. But today we are focusing on this segment here, tax resolution. But I did want to show you the entire value cycle and value proposition of a firm. Yeah, so here as we can start, with this picture here, and my coach is coming any minute, my boxing coach. I mean, I see it a lot of like good metaphor in boxing, like in this case it's kickboxing, but you see like the IRS is being the opponent and here's the person. And there is a lot of information asymmetry because that taxpayer usually doesn't know all the rules and regulations. So we're dealing with a lot of information asymmetry, so the IRS has an advantage in that regard. So the question is how to outmaneuver the opponent, how to bridge that information asymmetry between the client and the IRS. So we can get here to this slide, say if our firm can help you wrestle with the IRS and go through the entire process to fight for you so that you can win the case. And suppose if for some offers in compromise, it can be like very significant reductions. It can go like from hundreds of thousands of dollars to very low amounts. So that's what people and some aggressive marketers refer like pennies, settling pennies for dollars. But sometimes if you listen like to aggressive marketing, it sounds like the IRS is some sort of charity that is approving these offers in compromise left and right. That's not how it works. There is a specific process, and it's long and tedious process, but it's possible in certain circumstances, perhaps 20% of the cases, to make a case for the offer in compromise and settle for what we call pennies for dollars. So I focus on tax resolution and from the CPA perspective, so I can take you through the administrative channels. But my wife Maria is a lawyer and she is admitted to the tax court. So she can help you through judicial remedies. So one way or the other, be it through administrative remedies, if we follow the IRS channel or the state or municipal channels, But like imagine I cannot solve it for you, or imagine it's not the ultimately we realize we'll gain an advantage by following judicial routes, then my wife can help with that angle of litigation in the court. An interesting thing is once you file the petition with the court, it becomes a totally different ballgame, because the IRS starts negotiating totally different once they see, hey IRS, we filed a petition to the tax court, and then they are very motivated to settle the case, and in 90% they settle the case before it really proceeds into litigation because they don't want that mess. So even by filing the case with the tax court can be helpful because it increases the stakes and the client's bargaining power in negotiation process with the IRS. So here's the form for you that you can scan, and it will take you to the form that you can fill out. And I understand that you may not have the tax problems yourself, but I want to challenge you to think of any friends or relatives or acquaintances that may have some tax challenges that need to be settled, some penalties abated or some settlement achieved with one of the tax authorities. So here's the QR code for you to scan and fill out the form, and it's one of the ways to stay in touch. I'll be sending newsletters to keep you abreast of the developments in the laws and regulations that may be of interest to you or people who seek tax relief. And I think it's a good segue here for me to ask Mega about one of the challenges that unfiled tax returns can yield, because she works on the loan side, especially the microfinancing with the refugees and asylees. So I'd like Mega to share what challenges did you witness the people that you work with had when they wanted your help with financing, but they had unfiled tax returns or back taxes or any sort of disputes with the IRS. Like, could you comment on that, please?
Yes, Vasil. So there are two factors that I would say were very important for having a well-kept tax document or a tax record. One of it is that as a financial officer and as someone who looks over a lot of loans, record keeping and financial discipline is probably one of the key factors that show that a business is well-to-do. They know how to handle their stuff, and they have their financial documentation is well kept. It's typically through consistent tax documents that show, good deductions, that show costs, that show how much revenue is being brought in. It gives us a understanding of how well this business is doing. The second part would be support during economic downturn. For instance, like during COVID and right now during recession, the government is going to come out with several grants, several offers that would help business owners with this relief. So during economic downturns or crisis, governments implement tax relief measures and they support small businesses. They provide tax credits, deferrals, reductions, grants, loans, and DOC handled several different programs during COVID. So one of the examples is Paycheck Protection Program that helps fund paychecks for employees. Another one is Economic Injury Disaster Loan, which is the EIDL. And that provides loans for small businesses at a lucrative interest rate, considering current market interest rates pretty high.
I just want to interject here and make sure people understand that for refugees and asylees in this high interest environment, BOC that Mega represents can get 3% loan. So it's a huge differential, makes a huge difference for refugees and asylees. And in showcase, it's not one size fits all. I attempt to send people to where it makes sense. So like Mega specializes in refugee and SLE microfinance, and 3% in this high interest environment is like it's hard to beat that kind of offering.
Right, it's pretty lucrative, and if I may, even the government loan programs that are out right now, like the economic injury disaster loans, which have closed recently, but they were also at below the 3%.
Yeah, it was like it was like 3.75% for profit businesses, but for non-profits it was actually 2.75%. So, and it was like 30-year loan, and yeah, like those were very competitive too, but they closed.
Exactly.
But they did close back in May 2022, and the SBA took the portals down in June 2022.
Yeah, and essentially all of these programs that are missing out, the government agreed that unanimously the tax documents were the one way to show financial stability, or all around what would be accepted for underwriting, for loan purposes or grant purposes, to determine eligibility of any businesses. And because of that, I would say keeping a consistent loan tax document that shows not only profit or loss that you're making, but also lists down the costs involved for running your business is important, because I remember during the Paycheck Protection Program, the Schedule Cs and the 1040s, the 1120s were so important in determining the monthly paycheck of each employee, and using that to determine how much of a grant they could qualify for. Same with the economic injury disaster loan. The tax document was used to determine the eligibility of how much loan amount you could qualify for. So there were a lot of clients who had filed on time. They were able to showcase, and they were able to get loans above $100,000. However, there were clients who unfortunately showed too big of a deduction and loss, and that did not allow them to go through many programs and grants. And like Vasila said, being disciplined and being pretty straightforward on your loan documents can provide a lot of support, especially in economic downturns and when government is putting out grants and loans.
Yeah, so like
that's the one. Yeah, that's the one document we use as underwriters to go through and determine the financial health of your business.
yeah, so imagine you're working with a refugee in SID, and you're trying to help them with this competitive 3% loan, and imagine they have back taxes they didn't file for the last 3 years. So once you apply for the IRS transcripts and you are made aware of that, what do you do next? What are your steps to help the client that would really needs the loan for business, but is precluded from qualifying on the tax grounds?
Our first advice is we always do give this general advice to everyone that they must do advice that they go and fill out and register and apply their tax returns. Because even for our policies, we can't move forward without having at least 2 years tax return documents. It's one of the most required financial documents requested. But when it comes to flexibility around people who have not filed for taxes, we make sure cash flow is something they're able to provide and show, and financial bookkeeping in other ways, whether it's bank statements or whether they have an accountant keeping records of how well the business is doing, or at least what the cost of the business is. Or even if you are starting the business, I think those financial documents would be something that we can help work with you on that, and we provide a lot of pro bono workshops on, but definitely working alongside an accountant to know the health of your business would be the advice that I would give most refugees in asylum.
Yeah, thank you for sharing, Amaga, and explaining to us how your process works in different programs, and especially commenting on the instances where somebody has back taxes or tax debt, and how it can become an additional challenge in their quest to to obtain business finance. Really appreciate your input, Margaret.
And if I may add, a lot of refugees and asylum cases will not have financial documents in place, and asking 2 years tax returns from Ukrainian parolees does not make sense if they've been here for just 6 months. So in that way, we do find leeway and leverage to work with them. But let's say they go through a loan process with us or a grant process with us and achieve funding, and in the future we see that they've taken on the advice and they've started proper bookkeeping or record keeping, and their business discipline is pretty good. We do take note of that. That's something that we do hold as an importance. Like I mentioned before, credit is not a determining factor for us, but character is, and the character of a business owner who's willing to take on advice and implement is always, it lowers risk in many other ways for a loan officer, especially if we are going to be fighting for your case and things are not very favorable.
Yeah, so do you usually have a time frame, a time window? So imagine your client does have tax challenges. Do you give them a deadline and say, okay, here's a window for you to rectify your taxes? So imagine you say, so you do discover taxes and you say, go and talk with your CPA and have your CPA fix that, and then do you give them a timeline to fix that, or how does it work?
You don't know, but like that, it's pretty frequent with me and my clients to go through that process. I find myself having several conversations with CPAs regarding the health of the client's business, and usually the CPAs are able to kind of direct me in the information that I'm requesting, but regarding timeline, we like to assess a client's loan readiness ahead of application, ahead of having a hard pull. So because of that, we can provide around 2 months of flexibility to get everything in before we submit a loan application, or we work with the client and the CPA that the client is working with to get everything in, to make them loan ready, and then start the process.
Yeah, so let me ask you this question. So imagine that the client is a good offering compromise candidate, but the process normally takes between 6 to 18 months to complete. So my question is, as long as the CPA writes you a note and saying we are actively working on the offer of in compromise for this client, will that be a sufficient basis for you to keep on moving with the financing process?
Definitely, we try to find the best way we can adjust for our clients. So if working with the CPA, we would probably let the CPA know that we need a financial trail that we can follow through, that we can underwrite, and that doesn't necessarily have to be a IRS document. It could come in several ways. Like I mentioned, it could be a informal bookkeeping that you keep, and an informal bookkeeping what is much better done through a CPA, as well as cash flow documents, bank statements, anything to kind of verify further.
You see, it's like Archimedes said, give me a starting point and I will overturn the world.
Exactly.
So essentially, we are looking for the leverage point. I mean, okay, the client is in a bad situation. What point can we find and leverage in order to help him or her out? So like Ponce, so opening bank accounts is pretty tough for new immigrants and foreigners, and they come like, cannot open the bank account. Like, can you help, Vasil? So usually I work with Ponce Bank. Ponce Bank says, well, generally we don't open accounts for new people, but if they have a CPA who is based in New York, we can leverage connection with the CPA in order to open the bank account. So you see, we are looking for the leverage point. So likewise in this scenario, it's like, okay, it's like there is issue with taxes, so like you can refer the person to a CPA, and then even though the process can be lengthy, but you can leverage the initiation of the process in order to not prevent the process, to prevent the process from stalling.
So, not just the 1040s and the 1120Ss, but also, getting the PNL or even getting, I believe it's the New York State 45s about employees are also other documents that we request. So those are better, are better handled by CPAs, and getting it through CPAs has been something that is an ongoing conversation with clients and CPAs. So that is something that we go through.
Well, Mega, I really appreciate you, especially, like right now with the influx, as you mentioned last time, you focus on the Afghani and the Ukrainian refugees at this point, and there was big influx of Ukrainian refugees. So we talk about roughly 200,000 Ukrainian refugees, and about
200,000, Ukrainian refugees.
and about half of them came to New York City area. So you being strategically positioned like this and so actively working, I'm very grateful for all the work you do in this space.
Thank you. Yes, especially with Ukrainian refugees, we realize there are a lot of aspects of our underwriting that we do have to be flexible around. They're new. They don't have much to go on with to show their loan readiness. So finding new measures to show that other than credit, other than tax documents or whatever the U.S. government holds as official is important.
Yeah, and there is a legal caveat that technically Ukrainian people on this program are technically not refugees under law, but they are temporary displaced persons. So
yes,
even though technically they don't meet the definition of refugee, but MAGA's office makes a point, yes, on technical legal grounds, they are not refugees but temporary displaced persons. However, they do make a case on behalf of these individuals that even though technically they are not refugees, but effectively they are refugees.
Yes.
So her office still qualifies them for those 3% loans.
Right, that is true.
Yeah, thank you, Magda. So my coach, my boxing coach showed up. So I'd like to get to the prior slide here when we were talking about the IRS being in the position of the opponent. And like here, the client can find himself in this position. So, and then here we talk about fighting the IRS. So I wanted to make it real for you guys and invite my boxing coach here to talk about the coaching. And he and I had multiple conversations about boxing and vis-a-vis fighting the IRS. And you see, sometimes I would stop moving. I would kind of stall out in the tracks. And he's like, Vasil, you always got to keep on moving because the best defense is offense. It's like don't just stop. Like keep on moving. Because if you're not moving, your opponent is outmaneuvering you. So that's why I want to ask Coach Ricky to share a few things about boxing and how he sees it applicable to the tax resolution space. Ricky, why don't you come over here and share a little bit?
Good evening. I'm a very bit shy, dealing within this space, but when I dealing with student, dealing with boxing, I looking at like a metaphor or allegory. Pretty much a metaphor for life, dealing with whatever you do, you gotta be in the offense. Keep on moving, keep on stepping, and don't retreat. It's like Churchill. I believe Churchill said that if you're going through hell, just keep on going, just keep on moving. Don't. So I look in it. I look in anything you're dealing with. It's just straight up. One got to train. you know, whatever field one into, and one gotta just keep on, you know,
It's a lot about consistency,
you know,
right?
consistency.
So like,
you know.
could you mention that sometimes you told me to do homework, you said like, Vasil, you got to practice every morning, and then I meet with you next week, and you're like, Vasil, did you practice? And I'm like, no, I got busy with something. And could you talk about consistency in the process? Yeah.
Okay, and I always told any of my students the importance of consistency, and you know, my student just mentioned consistency, which for some reason I was watching this entrepreneur guy, and he was speaking about any fast food restaurant or any place, what they sell is consistency, and everything you do is everything you do, whether you box, whether you're dealing with, you know, tax, whatever you do, you gotta be consistent about, you know, about what you do, you know, because sometimes some people have great ideas, you know, and we can sit and we can intellectualize a lot about many things, but it's all about consistency.
I have a question.
Yeah.
So a lot of students certainly come to you for your guidance,
Yes.
right? For your practices, and let's imagine a student comes to you and says that they have a problem they're not dealing with, which has nothing to do with boxing,
Yes.
right? There's a problem they're not dealing with, they're procrastinating and not getting up on it, not starting with it. What would you advise them?
Good question. I would tell them just simpler, just do it. It's very simple, but it's just you just do it. You know, it's simple because, you know, we many people, they have a saying that many people is in the graveyard who have a lot of ideas lurking around their mind, but they never, you know, they never just do it. You know, it sound crazy, but it's the main thing is just do it. Take that step. You know,
Yes,
the hardest step in anything, the hardest thing to do in anything is the first step. You know, when
Yeah.
a child, you know, when you watch a child, you know, when a child, the first step a child make, you know, say, oh, he or she start walking, you know, that step. So
See, like, and remember when you were talking about the importance of sparring, of actual sparring, and you said a lot of coaches don't have their students spar with them because it can be psychologically traumatizing. They can be so psychologically traumatized during the actual sparring that they would not want to continue boxing.
true.
But you said, like, look, sparring is super important because when you spar, you engage with the entire psychology of the person.
True.
You got to maneuver it really well.
True.
And remember when you were telling me that your goal is to get me mad. Your goal
Yes.
is to get me frustrated.
Yes.
Because if I get mad and frustrated, I start making mistakes.
Yes.
Or I go like all force at you.
Yes.
I overspend my energy.
Yes.
I don't calculate it strategically. And then you easily I miss a punch. You outmaneuver you, and I'm down.
I can manipulate that situation because that's like in anything, you know, in life, you know, with evil, you know. That's why my student, I always like to see how they react under pressure, how they react under frustration, and that's the same thing with anything you do, you know. You know, are you you know, it's four of us right there, 4 people here, and you might don't have a big audience or nothing like that, but no matter what, you gotta keep going. You gotta keep going, and yes, every time when things looking good, you know, you know the outcome. Everybody feel good. When my student them, when I saw my student them and they doing good, and I pretty much like to see them how they react under pressure. on dealing with the sparring thing, what I would guess what y'all doing right now is sparring. Sparring, cause giving great advice and great thoughts, to people and come on up with a solution, but you gotta keep going.
Yeah, because like if you talk with the client and the client challenges your position, I mean if you're dialoguing with your client, and so essentially the client challenges your position and say, you know what, I wouldn't want to take that pathway, how about this one? And like if the client like really reads up and educates himself or herself about the process and knows the gist of the process and challenges the consultant's position, out of that intellectual sparring, so to speak, you can design even novel, even better strategy that a consultant by himself would be able to come up with.
True.
I have a question.
Yes.
So what do you recommend if negative emotions overcome in people?
If negative emotion overcome
Person.
a person.
I mean like overwhelmed, like
Yes.
the person feels overwhelmed under the weight of the negative emotions.
That mean you lose at that moment. You lose that. If you go in a 10 rounds, Kali says a 10 round, that mean you gotta regroup.
How?
You gotta if you have a timeout, if you have a timeout, you might say, okay then. If you have a 1 minute that, you might have to go on coming back with a different strategy, because it's all about strategy. Because you cannot when you deal in your field, whatever field you may pursue or whatever, you cannot let it gonna come. That's why you spar, that's why you train. Those things, those negative emotions gonna come, but
Yeah, and I'll give like a tangible example from that. So I have a lot of energy, so I just go with it, and I spend a lot of energy. So coach goes time out. Like Vasil, you have lots of energy, and that's good. But the problem is if you don't spend that energy correctly, I would maneuver you. So when you take the time out, you take the opportunity to help me gradually change my beliefs. So there is something wrong with my underlying beliefs. I think like if I'm going like the machine forward, I just put the energy, and just because I have a lot of energy, I think, oh, I have a lot of energy, let's use it. But you said that your goal was to help me to use that energy strategically and not mindlessly. Because I was kind of just working off of energy. And you're like, look, you were during timeouts, you were helping me change the belief that it's all about energy, and I would just go like a machine. Just say, let's figure out the way to use it strategically. Yeah, so I really appreciate Coach Ricky sharing to see how fighting the ARS has its metaphors in boxing, and boxing has metaphors to different life applications. So the idea is like we fight and we spar so to maximize the best results for the client. And we'll move on with the following slides here. So the IRS is like the most brutal collection agency on the planet. If 15 million taxpayers owe back taxes to the IRS and have tax debt for a total of 458 billion, and that's with the B, 458 billion. IRS just received, this slide says 80 billion, it's a little outdated number because there was political compromise. Remember when there was shutdown nearly happened and over financing, and the Republicans did eventually got a concession from the Democrats to lower this 80 billion figure right now it actually stands at 60 billion, but still 60 billion is unprecedented financing for the IRS. And out of that 60 billion, 45 billion is just for enforcement action. So remember all this money that was coming for COVID relief, for PPP and EIDL, all the government programs. So on one hand, the government was giving money to businesses and people. Now, like, it caused huge deficit, and that's one of the reasons the Fed raised the interest rate. But now, like, one of the ways for the government to recoup money is through a higher enforcement action. So hence the 45 billion goes to strengthen audits and enforcement action, which means that the audits and examinations are going up because the IRS will be hiring more agents. Specifically, they are committed to hiring 87,000 agents over 10 years. Granted, some of them will retire, but still it will result in the net change of about 35,000 agents. So even consider retirement effects. So like 10 million taxpayers have been identified and targeted as non-filers. So that gives us a snapshot. But that's only now before this 45 billion had time to take action. But with higher enforcement action, even more cases, many more cases will be flagged. And just because the revenue officer wasn't assigned to somebody's overdue tax case doesn't mean it won't be assigned, especially with unprecedented financing. So unfiled returns, so to obtain resolution, the client must be in compliance at least for the last 6 years. So that would be the first step to get, the first step of the process will be review the tax transcripts and see where the client stands from the collection statutes and collection statutes perspective. And based on the evaluation, come up with the right approach. So for the first stage, transcript evaluation, and for the first stage, to get started with the first stage, it's 1,500. Like we charge $1,500 for the first step with the transcript evaluation that will help us get to the actual strategy, and then once we see the amount of savings we can produce or estimate the amount of savings in relation to the tax debt, then we can negotiate the price per case. So the second step is getting compliance, getting this unfiled tax returns filed, and then the third step is actual negotiation to reach the settlement with the IRS or with the tax authority. So here's a case study, unfiled returns case study. So the taxpayer had a bit of a mess. 4 years of tax returns were not filed, and the IRS prepared substitute returns, which means if the IRS doesn't receive actual returns, it files what's called SFRs, substitute for returns. And those SFRs don't take into account any deductions. So that means that the amount of liability would be much higher than when the taxpayer actually filed the tax returns. So the IRS assessed $62,000, including penalties and interest, and was threatening the garnishment of the bank accounts. And like we were able to protect this client and reduce the tax burden to $3,800. So it saved the taxpayer over $58,000 in that particular case. 5 ways to solve your IRS problems, and this part is pretty streamlined because there are not 10 ways, there are not 15 or 20 ways, just 5 main ways to help the client with the case when we talk about administrative or IRS remedies. So one is offers and compromise. Then another one is installment agreement. Third one is partial installment agreement. The fourth one is penalty abatement. And the fifth one is C&C, which means currently non-collectible status. So we talk about each of them a little in more detail. So offers and compromise were instituted by the Congress in 1999 So this tax resolution industry is essentially 24 years old, because until then, taxpayers were hounded by the IRS without any effective remedies. But now, in approximately 20% of the cases, if the taxpayer qualifies by assets and income, so the IRS needs to look at assets and income in order to calculate so-called RCP, reasonable collection potential. Based on that reasonable collection potential, the IRS will be able to determine if they will satisfy the offer. Sometimes they can satisfy it at the lower amount, but it's only 20% of tax resolution cases, meaning that it's not a charity agency to forgive debt, but in certain cases it can do so when the assets and income are fairly low, and the taxpayer can prove that they cannot come up with the amount in collections. So here are the factors considered for the offering compromise: ability to pay, income, allowable expenses, and asset equity. This process can take between 6 to 18 months to complete, and involves revenue officers and negotiation with the revenue officers. So that's the third step of negotiation process. Then the second remedy available is installment agreements. So those are properly structured payment plans, usually over 72 months, and they are different than installment plans negotiated by the taxpayers, because sometimes the taxpayer would receive a notice from the state or from the federal, and it will say, if you cannot pay, please call us. So the taxpayer calls the line, and they work out so-called what they think is an installment agreement, but actually penalties and interest were never stopped. It's so they end up with a forever lasting obligation because they can never pay it off, because they thought, oh great, now we can complete these payments, but the interest and penalties were never stopped. So it's not a properly structured installment agreement. In order to structure a proper installment agreement is the entire application process, and if approved, it will the penalties and interest will cease, meaning that the taxpayer won't be incurring these additional penalties and interest, which is not the case when the client just calls the line on their own. And yeah, there will be installment agreement, but it's not installment agreement in the sense of an actual tax remedy that can be effectively negotiated by the tax professional. So the threats from the standpoint of installment agreements is like I already mentioned about these unending payment plans that the clients think are installment agreements, but actually they are not. And yeah, we already discussed this slide. And this
I have
one,
a question. So,
yeah.
I mean, before getting a notice, how could the taxpayer be made aware of this?
Yeah, so it's the ideal way is the address is correct. Well, the problem is when taxpayers move locations, the notices often get lost. So one service that our firm offers is tax transcript monitoring. So we use software that has API to the IRS, and if I get power of attorney from the client, I can monitor their transcripts through this software. So we charge $150 per month for individual transcript monitoring and $300 for company transcript monitoring. So that means we'll provide you a report and say, as of now, here's your current status with the IRS. You won't have to guess how your situation looks with the IRS files. And so that's what I would recommend. If the client wants to be sure, then that's a good way. I'll recommend getting the service of transcript monitoring.
Agreed, that's a valuable service, but I mean in terms of a client actually thinking about this and realizing it earlier than later.
Yeah,
Let me-
like could
I
you?
think you should continue. I'll rephrase my question better.
Yeah. Could you elaborate? Could you elaborate?
I will. You can continue. I'll gather my thoughts.
Yeah. So he'll formulate the question a little more precisely, but we'll get on with the presentation now. So installment agreement case study. So in this case, the taxpayer owed $49,000 for 2020, 2021, and the IRS, they thought negotiated. They told me, oh, we negotiated installment agreement, and I said, you negotiated installment agreement, but what they meant, they just called the number of the letter, and they thought it was a proper installment agreement, but that was like this. I mean, really proper term for that is payment plan. Clients call it installment agreements, but really they got a payment plan that never stopped their penalties, interest. They kept on accruing. So they said, okay, the IRS, we must be paying to the IRS $1,100 per month. And the taxpayer said it's difficult to come up with this monthly payment, and the lien was the federal tax lien was never released, so it was still attached. It was still attached to the client's assets. So what our firm was able to do was to negotiate $680 a month, but not just a payment plan, but properly structured installment agreement, which is a binding instrument between the taxpayer and the IRS. It was over 72 months, and just big caveat here, penalties and interest were stopped. They were not accruing anymore. And this, and the future to pay penalties were reduced by 50%, and tax liens were released.
I mean, yeah, I did remember my question.
Yeah, go ahead.
So,
Yeah.
with regards to a client coming to you for monitoring their transcripts, how would a client check if the work has been done transparently? I mean, what does your firm do to promote transparency?
Well, we provide a report. We provide a monthly report, that will state that as of such and such date, here's what the transcript shows to the taxpayer, individual or company. So we'll provide a monthly report stating about the current condition of the taxpayer's account before the tax authority.
And what if the client is not, with the flow of financing, does not have the knowledge of finance or accounting? How would you increase their knowledge so that they can actually?
Well, you see, one of the pinnacles of the beat down services is the entire value cycle that I showed you about a while back. So the idea is to train them with financial literacy and explain them in the way they can understand and follow. So, like, I'm not going to use technical jargon for people that don't understand accounting. I can use it with my colleagues, I can use it with other tax professionals, but why burden the taxpayer? My goal is to explain in a way that will really make sense for them.
All right. Yeah.
So another remedy available is PPIA, and you may think PPP, why is it like PPP, and here's PPIA? Well, it's partial payment installment agreement, that's what this PPIA means. So it's like similar to regular installment agreement, where the client is making monthly payments, but the difference is that the client is able to pay only part of their taxes that they owe to the IRS. It's also known as backdoor offer and compromise, because sometimes, as I said, only 20% of cases would qualify for the offer and compromise. So the client is like, so what do we do now? We don't qualify. I mean, we hope to settle it for much less. Well, what you can do in the interim, you file PPIA, and if the client's circumstances change, we can resubmit for the offer. So that's why it's called backdoor. Oh, I see. Backdoor offering compromise. Yeah, and here are some of the cases where it's advisable. We already mentioned if the client doesn't qualify for the offer or doesn't have enough monthly disposable income to qualify for a regular installment agreement, meaning they cannot pay the entire debt but only a portion of it, hence partial payment installment agreement. And in some cases, it's actually even more advantageous than the offer. Sometimes it's more advantageous. So here's the case study for you. So the client owed $45,000 to the IRS. due to the non-payment of taxes, and they thought, I mean, the payment plan that they got was $800 per month. With the IRS, that was like way too much for them, for their cash flows, monthly cash flows. We were able to reduce that payment to $200 per month over 43 months. So you see, it's not always. Some people ask me, over how long do we pay it off? And the rule of thumb is like 72 a month. And it's like, well, is it always 72 a month? No, it depends on the facts and circumstances. In this case, you see, it was like the IRS agreed for 43 months. But still, 43 a month, we're talking about 3.5 years that the taxpayer had to get their ducks in a row to settle this debt. So we settled this case for only $8,600, and you see, pay attention to this original amount was $45,000. We settled it $8,600, so that's 43 payments times $200 per month. So that was the example of partial payment installment agreement.
How do you negotiate with IRS? How do you settle the case?
Well, you see, like one of my mentors, Stu Sobel, he passed away a while back, but he was a veteran of the IRS services, 30 years of working for the IRS. Then he opened his tax resolution practice. So he taught me this principle. He's like when you should, but make sure your gun is fully loaded. So what he meant by that, like now the Internal Revenue Procedure Manual, they follow what's called IRM. So it basically regulates the way they're supposed to carry out their work. So if I can quote the actual provisions of their own procedure manual, so essentially, back to information asymmetry, they see the client doesn't know their manual, they can do things which is out of line, and the client wouldn't know anyway. So like knowing things such as like Internal Revenue Procedure Manual is very helpful because you can hold them accountable for their own procedure. Once they hear that you know your stuff, it changes the process. Sometimes you have to schedule a conference with the manager because the first year manager may not be competent enough. So then you schedule a conference with the manager, or with then you can appeal the decision of that manager conference. You can go to the appeal level, and then, as I said in the beginning, sometimes if you file a petition with the tax court, it doesn't mean you have to go through the litigation, but just filing in the court and notifying the IRS, we filed the petition to the tax court on behalf of the client, changes the ball game. They negotiate totally differently because now they are motivated to prevent the government from incurring legal costs if they lose the case.
Thank you.
So with the penalty abatement removal, there are 148 different penalties, and all of them, so you talk about different penalties that the IRS can impose, and there is a way to remove them with the IRS also by negotiating with the tax authority. So in some cases with the initiatives such as fresh start initiatives, it's possible to reduce it to zero, and just on negotiating the penalty reduction through things such as reasonable cause. And since we're talking there about reasonable cause, I also wanted to invoke that one of the principles of the tax administration is called ETA, effective tax administration. What that means that the tax administration must adhere to the bill of taxpayer rights, that the taxpayers have right to a fair and fair hearing, and they are entitled to know the basis of the IRS decisions. And when the client's circumstances are very tough, so for example, somebody's identity was stolen, and they want to, and the IRS, and somebody had some fraudulent tax returns filed, then we can invoke ETA. We can do ETA case, effective tax administration. Say, look, in this particular situation, it's not the client's fault. They were subject to extraordinary circumstances out of their control. let's negotiate a settlement because of the client's hardship and identity theft in this situation. Or imagine there is COVID and the war in Ukraine. So people who are from Ukraine, for example, were psychologically affected by losing their relatives or loved ones in Ukraine. So like we have like this person has the war in Ukraine and the consequences plus COVID challenges. So we can argue in certain cases for ETA case to invoke the effective tax administration and consider the client's hardship, and that it would be very, it's not that this, it's like a negligent taxpayer, but by the virtue of the circumstances, the client wasn't able to meet their tax obligations. So here are reasonable cause defenses. You have them enumerated, some of them major ones enumerated here. So you see death, serious illness, unavoidable absence, a fire, flood, casualty, natural disaster, unable to obtain records, and it's like especially, you know, like in the, they may lost records like due to theft or fire, the banks cannot produce it beyond 6 years, for example. They make a bona fide good faith effort, but they just not unable to obtain records. A mistake was made by a CPA, for example, or they were misadvised, erroneous advice or reliance on tax professional, like here's the one I just mentioned, written oral advice from the IRS. But make sure, like when you talk with the IRS on your own, make sure you write down the agent's number. It's very important. Create Excel spreadsheet or Word document. When you talk on your own, write their agent number, date, write the nature of the conversation, because that can be used as one of the defenses. Because then the IRS agent says, we never had this conversation. And the way to prove it is to have contemporaneous evidence.
Is it also not recorded, sort of interruption?
I mean, usually unless they made notes, some of them may forget to make notes and update the client file, and there is no way to retrieve calls like from the IRS.
Oh, really?
No.
Like the banks, they have recorded calls.
Yeah, banks, yeah, but with the IRS, that's not how it works with the IRS. You can obtain information like official information, but it doesn't contain phone records. So it's like crucial, super important to make your own notes. That way you have some sort of evidence that we can provide for the case. Then ignorance of the tax laws, and like one judge said that immigration code, the title related to immigration, and then the title related to the tax law in the code of federal regulations, and the most complex areas of law. So we have like say ignorance of the law. We talk about information asymmetry. The taxpayer didn't know. It's not like the taxpayer purposefully evaded taxes. Taxpayer honestly didn't know. So generally we cannot claim ignorance of law, but in tax, you know, we can say like, look, that's the first time. Now we know the obligation will be making right in it. Reasonable cause, ordinary business care and prudence, and undue economic hardship. That's some main examples. So here's the case study for you. The divorced individual owed $17K in penalties 2014 through 2021 tax years for failure to file and pay. It's two different penalties. Failure to file is one type of penalty, failure to pay is a different type of penalty. And that was attributed to his inability to access records from his estranged wife. So like check out this prior slide. You see unable to obtain records? Well, his ex was saying like, I don't care about your tax problems, like you deal with them, I do not provide you records. So that's, we can apply for spousal relief in cases like divorce situations like that and say like, look, the person is making a bona fide good faith effort, they just not able because they got divorced, another like ex-partner is not cooperating. So we submitted a penalty abatement request based on reasonable cause, inability to access records, and standard business care. And so like after the initial denial, the IRS did approve on appeals and like save the taxpayer $17,000 in that scenario. So CNC, it's currently not collectible. So like imagine somebody has very meager income, like only social security income, and this elderly person is really struggling financially. There is no way the IRS can collect it. We can say, look, for now at least, we have to freeze the case. So hence, currently not collectible. So that's the fifth remedy that we can invoke. So it's important to know how to file a penalty abatement that the IRS will accept, because there is a procedure and protocol to invoke these defenses that some of them we outlined. And like I have extensive experience removing penalties, and specifically half a million in total penalties removed in my experience. So then you may be wondering about municipal. You're like, okay, Vasil, you're talking about federal, but can you deal with the municipal New York City taxes? Because keep in mind, once in a while, some jurisdictions have their own third level of taxes after federal and state. That's New York City taxes. Yonkers has its own, Detroit has its own tax system, so that's the third level on the municipal level. So what business owners often forget is if you're located in Manhattan, below 96th Street in Manhattan, you got to pay commercial rent tax if you're above a certain threshold. Well, business owners get busy, they forget about the requirements. So like I dealt with some taxpayers, and they had like huge sums and penalties and interest assessed because they forgot. They're like, okay, we operate on 96th Street. They're not thinking like, so what? We operate in Manhattan, but that's a separate municipal obligation. So I did settle some cases like that for commercial rent tax. So I saved $285,000 in liability, including $166,000 in interest and penalties for commercial rent tax, and the client settled within New York City tax administration within a few months. Yeah, so please raise your hand if you know someone who has an IRS problem. Okay, nobody here in the audience, but like it's, as I said, 60 billion unprecedented financing. Those audits, examinations are going up. So like you may get in touch, you may meet somebody who, because notices are coming with much higher frequency right now. And like the IRS was super busy with processing the COVID relief payments, but now they're basically back to normal, plus ramped up hiring too. Yeah, so I've dedicated my life to help people with tax problems because I liken it to something like immigration. I remember at one point I really struggled with immigration, and I will never forget my immigration lawyer because she helped solve the case, and it was huge. It's huge relief, that to have this certainty in the country. So providing a tax relief for somebody with high amounts of debt, with high amounts of debt, of tax debt, is one of those major milestones. They can stop the bleed. We can defend and protect clients' assets. They can worry about building long-term value for their companies and for their companies. Like it's like imagine like wife kicked out her husband. He sleeps on the couch in the living room, and the quality of life is like totally off. He's like, why haven't you dealt with the taxes? But he keeps on procrastinating. The quality of life is down. Their assets and income are exposed. So you solve it. It's like imagine you wave a magic wand, you solve it. What would that mean to you on this emotional level? So once you have that vision for yourself, you connect with that on the emotional level. That's how you would be motivated to solve your case. Because otherwise, I work with the client. They drag their feet. They don't submit documents because they may have not fully emotionally invested themselves. But once they know what does it do to me on the emotional level and quality of life, then they get motivated about cooperating and really solving the case. So the idea, it's not about taxes. I mean, it is about technical solving the tax problem, but it's really helping the client resume the quality of life. They don't have to live under the rock anymore. They can back to their life and like business and really maximize the value for their families. So we guide you through every step of the way. Like if that form that I showed you, this scan form, you can get your information down for the monthly updates and newsletters. So once we receive the form for you, you see this QR code there. You scan it, fill out the form. We contact you on the second day of retrieving the form, and we give you we give you free consultation. So value like $400 like hourly consultation, and that can get you started. You can get the process rolling. So again, here's the QR code for that form, and since the company is called the B-Dance, making the elaborate dance with the IRS and with the tax law to solve your tax problem, I want to make it tangible, not just, we're not talking about bees. My uncle had 40 beehives in the village, and he was selling honey, producing bee therapy, and the company did partner with the beekeeper, a local beekeeper here from New Jersey, and I'll show you the honey here. It's Josh's Bee Honey, and it's award-winning honey. This Josh won some awards for that honey in contests, and it's like, you see. So the bee dance, once the bee learns the source of the nectar, she goes back and tells other bees about that. So when we talk about the bees, there is a significant shortage of the pollinators, not only in South America but also North America. So when we talk about pollinators, so what's the point about pollinators? Two key words. It's defend and protect. Defend and protect the pollinators. Because if the pollinators are low, it's going to cause an issue for the crops. So like I'm a big coffee drinker. So if the bees don't pollinate the crops in South America, where we source most of our coffee, the coffee prices go up. Then the consumers suffer as a result. So we talk about crops here, and so the idea with the pollinators is to defend and protect. So I really love that metaphor of the bee dance, not only about negotiations, but when we talk about the pollinators, they are so useful for the crops and for the ultimate prices. The two key words we can say, defend and protect. So what do we do here for you guys? Defend and protect your assets. The same way as with pollinators, you got your assets, you got your families to take care of. So our value proposition is we'll take you through the entire value cycle. You saw 6 service lines, because our goal is to help you defend and protect your assets for the long term, maximizing value for your companies and for your families. So that's it. That's it in a nutshell. And I'd like to open it for questions to see if you'd like to ask any questions, anything that was unclear, or anything of that nature.
Absolutely, sir.
Very good.
Yeah. Thanks for explaining everything concisely and clearly. I think a lot of people would think hard about their tax problems now. And
Yeah, it's like Coach was saying, it's like overthinking. And sometimes, of course, you want to make sure it's a trustworthy professional. Check him in the database. If he says he's a CPA, check a database. Make sure he's listed as a CPA. You don't want to go to anybody. Check the testimonials. Do your due diligence. So, since it's a high trust transaction, I think the big challenge is in resolving. It's I don't know, what if they just take my money and don't solve the case? And unfortunately, there are cases like that. But once you do your due diligence, you're comfortable, then as Coach said, take action. Let's get it solved. Let's get it done. Let's get back to quality of life.
let's achieve tax relief.
Yeah, exactly. Let's achieve tax relief. That's the entity, the official name of the entity, but the brand name is the BDEN still. So thanks guys for listening. Next webinar is on tax credits, on various tax credit programs available for you to finance your business. So it's on the 24th. It's on the 24th. It's actually Ukraine's Independence Day too. And on the website, if you go to my website, you will see destroyed building in Kyiv. But a lot of these buildings are going to be rebuilt. So we talk about restoring old buildings or dilapidated buildings. You can get tax credits. It's only one example. There are various tax programs that will help businesses get cash from the government and minimize the construction costs in certain areas, so we can discuss different tax programs available to you, to your businesses. Thank you guys, and see you next time.